there's potentially still significant further for lithium prices, for other battery raw materials prices to go in this cycle. And obviously that's going to have a huge impact for battery materials producers and developers in terms of their share prices and in terms of their valuations.
Hello to viewers catching up on this virtual presentation, which forms part of our Mining Investment Insights series, coming to you from across the EMEA region. I'm very pleased to be in conversation with Matt Fernley, who is founder and editor of Battery Materials Review and also a hedge fund analyst. And we're going to be hearing Matt's presentation about some of the key issues and strategies to adhere to when investing in small and mid-cap battery metals companies. So quite a tough task there for Matt to succinctly explain this to us. But Matt, thank you very much for giving your time to present for us, and I'll hand over to you to take us through.
Right. Well, thanks very much for the invitation to present, Adam. I really appreciate it. And I will try and focus on some of the areas where I think that investors may need a little bit of help in this presentation. So just the ubiquitous advert to start off with. Battery Materials Review is a monthly subscription periodical where we analyze and look at the developments in the battery industry, from the raw materials right along to the end markets. And we also do a monthly podcast for anybody who wants a little bit more information about the battery industry. So just to sort of run in and talk a little bit about the energy transition. I've put this slide up here. It's very busy, but just to highlight where the battery space fits in and where the battery raw materials space fits in. So you can see the battery raw materials up here, and on the left, the primary cathode raw materials. On the right, graphite and silicon, which are the primary anode raw materials, and HPA, which is a material of growing importance really in all parts of the battery. And that then runs into this sort of cathodes and anode components of the batteries. And then batteries is linked to electric vehicles, I think, which everybody knows about as one of the key drivers of the battery industry going forward, but possibly stationary storage, which people are less au fait with as a major driver of demand going forward. I won't talk too much about stationary storage in this presentation, but I do want to talk a little bit more about the electric vehicle space. Starting with that then, and why are we excited about battery raw materials? You can invest in lots of different mined products if you're of a mine to gold, silver, industrial materials. Why should we be looking at battery raw materials? Well, quite substantial growth, I think, is a reasonable explanation. On the left here, we've got my forecast for annual EV sales, and you can see pretty substantial growth coming through. And then what that translates to in terms of lithium-ion battery demand. And we're effectively looking at a 20 times increase in the market over the next 20 years. Now, I should point out here that, number one, this is just lithium-ion battery demand. And I did mention stationary storage earlier, and it's quite possible that while lithium-ion remains as a key chemistry in stationary storage, we may see other chemistries emerging. So things like vanadium redox flow, chromium flow batteries, iron flow batteries, zinc flow batteries. So just to flag that there is substantial growth potential in those applications as well. But talking about lithium ion here, and then this very, very substantial growth profile we see, I would like to be forecasting it to be higher. So in my view, lithium ion battery demand, certainly in 2025 and 2030, there's a lot of demand in there that's not being realized by my forecast. And the reason it's not being realized by my forecast is supply, and it's raw material supply in particular. And you can see here in the chart a very, very substantial supply-demand imbalance emerging in lithium. Actually, it's in other battery materials as well. I've just put up lithium here to illustrate it, but a very, very substantial supply-demand imbalance emerging in the second half of the decade. But more importantly, for where we are at the moment, quite a substantial supply-demand imbalance emerging in the early part of the decade. And in my view, we're actually already in a lithium deficit. We've used up all of the inventories that were built in 2018, 2019 during the down cycle, and we are in a very substantial lithium deficit. And what does that mean for prices? Well, prices are already up, or rather I should say spot prices are already up 3 times since the trough in Q3 2020. How high could they go? The question we get all the time. My analysis on previous cycles suggests that prices could go up 10 times off trough levels in these cycles. So there's potentially still significantly far further for lithium prices, for other battery raw materials prices to go in this cycle. And obviously that's going to have a huge impact for battery materials producers and developers in terms of their share prices and in terms of their valuations. So just to sort of introduce this, I've tried to sort of put this informatic together because I want to illustrate that the battery materials industry is a little bit different from your bog standard mining industries. And these pink products at the top, these are effectively what you would expect a bog standard mining product to look like. So, you know, I have a hard rock lithium mine, I mine pegmatite, I take it out of the ground and bang, that's a mined product. Nickel sulfide, ditto, graphite, ditto. Now these purple areas here, these are effectively chemical intermediate products that are used in the battery industry. Now, these are totally unlike mining products. I'm going to talk about why they're totally unlike mining products in a second. But I just want to flag how different the battery materials industry is from the mining industry in terms of the product type. So lithium carbonate, that's the primary product of brine lithium operations. Lithium hydroxide, that's converted from spodumene concentrate and is the primary product that's used in cathodes, high nickel cathodes. Nickel sulfate, cobalt sulfate, high purity manganese sulfate, those are the key components of high nickel cathode chemistries. And then spherical graphite is the primary battery raw material for anodes. And I flagged there high purity manganese sulfate, and that's why the battery materials industry is so different from the mining industry that we've come to understand over however long we've been involved with the industry. I just want to talk here about purity requirements in battery raw materials. And we talk about purity in battery raw materials in different terms, but the primary requirement is generally described in these terms. And it's really 99% purity, 99.9% purity, and 99.99% purity. So 2 nines, 3 nines, and 4 nines purity. So you can understand from that, I'm talking about really high purity products. I mean, you don't require iron ore, for instance, to be that pure. You don't require copper concentrate to be that pure, nickel concentrate, etc. It's really, really very important. But when you look at it from the other side, it's even more important. So why don't we talk about impurities? So let's talk about impurity levels. Impurity levels in a 99% product are 1%. In a 99.9% product, they're 0.1%. And in a 4 nines product, they're 0.01%. And I think you can tell from that really we are talking about a totally different order of magnitude. So for instance, I've seen a number, I'm not going to talk about individual companies, but I've seen a number of scoping studies, for instance, be published where the cost structure is defined to the 2 nines purity level and the revenue structure to the 3 nines purity level. If you're talking about the difference between 99% and 99.9% product, maybe that doesn't look very important. But when you talk about the difference between 1% and 0.1% impurities, perhaps you start to understand that you're not comparing like with like. And investors have to be very aware of management teams who are doing this, who are not defining products or do not know enough about the industry to understand that they are comparing apples with oranges. I've just put a couple of specifications up here for different cathode materials, really just to highlight what I'm talking about. And the point that I want to make is that if you look at, for instance, the iron specifications here for lithium hydroxide monohydrate that we talked about earlier, or for high purity manganese, you're talking about 5 to 10 parts per million iron. And there really is very little ability to be flexible in a lithium ion battery according to these levels of impurities. So if I produce a so-called battery grade product, which is say 56.5% lithium hydroxide, but it has 25 parts per million iron in it, that is not a battery grade product. If I produce a so-called battery grade lithium carbonate, but it has 100 parts per million of magnesium in it, that is not a battery grade product, even though it seemingly has battery grade purity. And I just want to make the point that a lot of the brines, probably up to 20 to 30% of the lithium carbonate that's produced out of Latin America, is not battery grade. So it's never going to sell for a premium price. It's always going to sell for an industrial price, not a battery grade price. And investors have to be aware about that when they're looking at a company. So it really, really is very important to distinguish between battery grade purity and battery grade impurities, because if it has too high impurities, it's not actually battery grade. And you know, this requirement for very, very consistent and high quality product has resulted in a very, very substantial change in industry behavior at the evaluation level for projects. So in an old mining project, you obviously have your scoping study, your pre-feasibility study, and your feasibility study. At the early stages of the project, you might do a little bit of lab scale testing to ensure that your product can be upgraded to a saleable product, maybe around about 20 kilograms. Then at the feasibility, pre-feasibility stage, you probably do a bulk sample, maybe half a ton bulk sample to ensure that the chosen processing method results in a high enough recovery and a high enough quality product. Now in the battery industry, it's totally different. So, you know, first of all, at the scoping study PEA level, you have to do a lot more detailed lab testing. So you don't even just have to ensure that you can produce your product. If, for instance, you're mining a spodumene concentrate, you have to ensure that that spodumene concentrate can go all the way through the chain and produce a lithium hydroxide monohydrate product that's viable in an industry. Because there's no point in moving into development if you cannot produce a 2-spec lithium hydroxide product. And consumers, whether it's cathode makers or anode makers or cell makers or even OEMs, require much more stringent product testing all the way through the system. So it has now become industry best practice for companies to have a pilot plant, really publishing a feasibility study to make sure that they can produce this product consistently and to the right spec. And most companies, high profile companies now, are adopting a demonstration plant to do a lot of product testing. And effectively, what you find is even when you get an asset into production, you've got 6 to 8 months of qualification testing ahead of you to ensure that you can produce to spec. So just to give you an idea of what a representative qualification timeline looks like, you really are talking about a very substantially longer development period for a battery materials project than you are for a bog standard mining project. And I think this has a lot of relevance when you talk about the working capital requirements for mining projects, and investors should be aware of the fact that management teams need to factor in longer ramp-up periods than perhaps they would for an ordinary mining project, and therefore they need to raise more money for development. So just to summarize the sort of things that investors need to be aware of in the battery materials space, there's obviously huge potential for price increases in the battery raw materials space, but The sector is a lot more complex than many people appreciate. These are effectively specialty chemicals, not raw materials. One thing that a lot of forecasters get wrong is that materials are not necessarily fungible between projects. So if I have a project that has a certain spec, if I then can't get that into production in time, another project with a different spec is not necessarily available to replace it without a very significant qualification period and reworking of the product by the cathode maker or the battery maker. So, one project is not fungible with another project, and that's something that a lot of forecasters in the industry get wrong. The consistency of production is obviously key, with chemical testing and qualification over an extended period, very, very important. And something that's really, really important for investors to appreciate is there's no build it and they will come in the battery raw materials sector, unless you're willing to wait maybe 18 to 24 months for your product to get qualified. So management teams who go in and say, we're going for a fast track development, we're not going to go for a feasibility study, we're just going to go through and get it built. Those are management teams that don't understand the battery materials sector. So investors have to be aware about that. And finally, something that's very, very important here is that investors need to correctly evaluate development risks of a project. I see a number of stocks around at the moment. Again, I'm not going to name names, but are trading at a very, very, very substantially higher market capitalizations than I would pay for that stocks. Stocks that, even though they have completed pre-feasibility studies or feasibility studies, have not done enough product testing to ensure that their material is actually viable for the battery sector. And as an investor, I wouldn't touch those with a barge pole. And I think that investors need to be a lot more careful about evaluating early stage junior projects. And with that, I will say over to you, Adam.
Excellent. Thank you, Matt. Really, really insightful in terms of some of the more nuanced factors that you need to look for when assessing battery materials juniors. A couple of things I wanted to sort of talk about then. So it's the battery grade purity. Let's focus on lithium here, mate. Just for starters, it's the battery grade high purity lithium hydroxide that is really going to create the supply side squeeze, or has in your view. And that's where we're going to see potentially higher lithium prices, and then that might kick on to some of the better lithium projects that are actually producing this product.
Yes. I think that, as I said in the presentation, at least 20 to 30% of the product that comes out of Latin America is not battery grade. To be converted to battery grade, where possible, by the way, it's not always possible. It requires further work, which may, be very expensive, which pushes prices or costs up significantly, and also recoveries fall. So, you may only get 80 to 90% recovery on the conversion. So not as much material is going to be available for the battery industry as many forecasters are suggesting. On top of that, as we've seen, for instance, with the lithium hydroxide projects that have started up in Australia at the back end of this year, it takes a while to qualify that material. So, even though they've started production, they probably won't be able to ramp up to full production until early next year, maybe the middle of next year. And they're still going through the qualification with their potential consumers of that material. So I don't think that a lot of forecasters in the industry who are looking in from outside are aware of the complexities of the industry. Just because you have a spodumene concentrate deposit or a lithium brine deposit doesn't mean that you're necessarily going to be able to produce battery grade material. And, as we move outside the plain vanilla lithium assets, and I'm obviously talking a lot about lithium here, but I can talk about other battery materials later. But, we're looking at sort of lower grade, more marginal grade projects. We're looking at things like direct lithium extraction. Now, just to be aware, direct lithium extraction has been around in the industry for 10 years. and so far we haven't seen a viable project. It's very possible to produce lithium from direct lithium extraction, but we don't know how easy it is to produce lithium consistently to a battery grade spec from direct lithium extraction, because nobody's done it before. So there is a project in the US that's currently,
California-based seed.
That's currently being tested. But the other point about brines, and lithium brines in particular, geothermal brines, etc., is that each asset is a different asset. So each project is different with a very different chemistry. So the direct lithium extraction has to be tailored for each project, for each ore body. There's not a one size fits all solution. So, I think people need to be aware that direct lithium extraction, from whether it's from geothermal brines or whatever, is not proven for battery grade lithium production at this stage.
Very, very good point. And I was going to ask about DLE. Does that then mean that what people are essentially investing in, if you look at sort of Vulcan Energy in Germany and their proposition, they definitely didn't struggle to raise capital, but I think that's partly the situation, in a European lithium source, potentially with zero carbon. Is it this ESG narrative, but also the technology? As you say, the technology is very bespoke per project, depending on the deposit. So really, you're investing in the quality of that technology, or the potential for that technology to work.
Yeah, effectively in the projects that you mentioned, I think they've got very significant market valuations, and I think that's to do with a big influx of ESG investors. If DLE works, if geothermal works, it's obviously a huge thing for the industry and hugely positive, and it impacts the amount of groundwater that you're taking out, and potentially it's much more environmentally friendly than using evaporation of salar brines. So, if it works, that's a great thing for the industry. But I think investors have to be aware that there are risks about whether it will work on a consistent basis, and these projects are in my forecast, they're in my supply forecast. I really, really hope that they work. If they don't work, or if there are delays in the project, it really opens up the supply demand gap even more. And from the point of view of investors in plain vanilla projects, obviously that's a great situation until the auto industry goes, these lithium prices are way too high, we can't afford to use lithium ion batteries anymore, we better look at something else. So that's the big risk for the industry as I see it. It's great to have high prices for the producers, but if prices go too high and they go too volatile, that has the potential to put downstream users off.
Certainly. Just keeping on technology's point, perhaps before we could come back to some of those price drivers, I was thinking about the Lilac Solutions work with Lake Resources. I don't know if you cover them, and that's really good for reducing the water intensity of the brining process, which is another factor again within this narrative of ESG capital, looking at greening the world, but wanting to pick the right technologies and the right companies. Do you have any analysis of that potential technology coming through and improving the speed and efficiency of brining?
There are a lot of DLE type technologies available around the world. There is actually one that's in commercial usage in Argentina, that Ivent have a similar technology, and I understand that there are experimental uses of the technology in Chile. I think that I don't know their technology in particular. A lot of the stuff is private. It's behind Chinese walls, etc. But if that is successful for a lower grade brine, obviously it's great because it lowers the amount of water that's lost in the brine production process. And if you can bring on these marginal or more marginal brine resources, it's really exciting as well from the potential of sourcing lithium. So I think direct lithium extraction in salar brines is very interesting. The problem in geothermal brines is you get a lot of what's called TDS, total dissolved silica, in the process, which can impact the viability of the process. You don't get that to the same extent in salar brines because they're effectively room temperature. They're not as hot, so you don't get the dissolved silica. So fingers crossed. I follow that project quite closely. I know the management team, so fingers crossed that it goes through and is successful. We need all of these projects given the likely increase in demand that I see in the system.
Yeah, totally. So thinking about prices just quickly, it's often said in commodities, the cure for higher prices is higher prices. And talking to your point around the OEMs and the sort of downstream manufacturing, maybe turning away from lithium if the price gets too high. Do you think that would be the case? I've heard that the cost of lithium won't be the sole contributor for increasing cost of batteries. And so it wouldn't impact EV sales too badly.
It's a big question. It's a big question with a big answer. So obviously lithium is only one component of lithium-ion batteries. The problem that we're seeing with lithium-ion batteries is that the cost of other components is rising as well because of resource scarcity. So the nickel cost is rising, obviously not as fast as lithium. Cobalt has gone up as well. High purity manganese has gone up. And because of these power issues in China and the fact that synthetic graphite capacity has been halted, we're also seeing graphite prices go up as well. So we are seeing quite substantial costs across the board. I think it depends on chemistries. So, lithium in LFP batteries, which has become of increasing importance this year, particularly in China's chemistry, lithium is a key component of that. Now, everybody says, well, iron phosphate, that's a very common material, and it is, but what everybody forgets is that phosphorus production is high energy intensity, and therefore, because of the power issues in China, phosphorus production costs have gone up. There's a lot of very specific raw materials in the LFP battery chain, particularly things like vinyl carbonate, which there is a massive shortage of in China at the moment. And of course, prices for that have gone up. So, for LFP batteries, costs are going up. And then for NCM ternary batteries, costs are going up as well. Maybe not to the same extent, but they could potentially, go up significantly next year as well if we move into a tight supply environment for nickel, cobalt, and manganese in battery grades. So the big issue for the OEMs is that battery technology can go into the mass market if they can realize mass market prices for EVs. If battery raw material costs go up too much, which is going to force battery costs up, and we're already seeing that this year, the back end of this year. If battery prices go up, then it's going to be very, very difficult for OEMs to reduce electric vehicle costs to the level that they would need to if we're going to get to mass market volumes. So that's really the concern. And somebody in the supply chain is going to get into trouble. And if the raw materials end of the supply chain has pricing power, the chemicals producers have got quite a lot of pricing power. And the question is really whether the battery materials are going to have cost pass-through ability, in which case it's the OEMs who are going to get into trouble, or if the battery producers are going to experience margin compression, and the OEMs as well. So really that's the question for the industry. And then the big question is how much pain can they take before they start to have to look at other technologies.
Yeah, very good. Coming back to the developmental risk that you said was often overlooked, it's a great observation there, but does that change for you as an analyst and an investor? Does that change what you look for in a management team of a junior mining company as a result? Obviously, someone who's got mining expertise might not have chemical processing expertise or awareness, or they may have come into lithium from other sectors, oil and gas even. Tell us about how you look at the teams from there.
Yeah, I mean, I still look at management teams the same, because you still got to dig it out of the ground. But it's about recognizing that there are skill sets outside the traditional skill set. So I like management teams to bring not a specialist, because there aren't too many specialists around in this sector because it's so small, but I like people to bring somebody responsible for marketing in at an early stage, to indicate that they are starting to think about the requirements of downstream. You know, at the end of the day, for a battery raw material project, the requirements are still there in terms of mining. You know, you've still got to dig the stuff out of the ground, you've still got to concentrate it. It worries me when you see junior mining companies say, well, you know, we want to go downstream so that we can get all of the value add, but then don't hire anybody to work with them on the downstream. So as an investor, that's the sort of thing that worries me. But if, you know, a company says, I'm going to go downstream, and then bring somebody in to help on the marketing side, or a chemical engineer to help on the plant design side, then I'm happier. But if, you know, if a mining company says, well, yeah, no problem, we can take care of it ourselves, that always sets the alarm bells ringing for me. So I think, you know, there is still a big amount of mining in all of these projects, but there's also an increasing amount of chemistry in there as well. So I look for management teams to bring in expertise from outside, whether that's outsourced or employed themselves. I don't really mind, as long as they have the ability to speak to somebody in the industry. And, you know, if I don't see, you know, the chemical testing coming through, then I'm out of that investment, because it's clear that, you know, they haven't done enough work on the end market and the requirements of the end market.
Yep, very good. Okay, and my last question was based around, you know, with the evolving battery mix, it's important. Do you think it's important to be positioned into a range of mining companies covering the gamut of battery materials, given how much change and how many inputs there are now in a battery cell?
Good question. I'm going to go back to my stable answer, because I think if you're invested in junior miners in exploration projects anyway, you always want to be diversified, because at the end of the day, you know, junior companies have junior company issues, and, you know, whether that's not hitting the target that you're looking for in your drilling, or whether it's something going wrong, you know, when you do your bulk sample or something like that, junior companies often have issues. So yeah, I would want to be diversified anyway. If I was only in battery materials, yes, certainly. I mean, I don't want to be 100% in lithium. I'd want to have some nickel exposure. I want to have some graphite exposure. I definitely want to have some high purity manganese exposure, because I feel that that's a sector that's really misunderstood by the industry. So yes, I mean, for me, we're always diversified in terms of our exposure, and I think it's best practice anyway to be diversified. I mean, you know, it's common sense. Don't stick all your eggs in one basket.
Yeah, certainly. Very good. Well, that's about it for time. Thank you very much, Matt. Really, really enlightening. And we look forward to catching up again on the year on some other challenging subjects. And of course, for viewers, please do check out Matt on the podcast and Battery Materials Review and his channel.
Brilliant. Thanks very much.
Cheers.